with the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. Coming up, we will have half an hour of business news and analysis. On today's show, global shipping prices continue to rise as the Red Sea crisis deepens, and the UN agency says global tourism will fully recover in the year 2024. And now let's begin with our top story. The global shipping prices continue to rise as the Red Sea crisis deepens. Data from Freightos terminal shows that the cost of shipping from Asia to Northern Europe has surged 460% compared to mid-October. Some 12% of the global trade worth over $1 trillion pass through the Red Sea annually. However, major shippers are now diverting container ships around the Cape of the Good Hope, adding more than a week to transit time. The IMF says maritime traffic through the Suez Canal is down 37% this year. So for more on this and the impact of the Red Sea crisis on the global economy, join us on the line now are Chen Jiahe, Chief Investment Officer at Novim Archi Technologies, and also Yan Liang, Professor of Economics, Willamette University. So Yan, thank you for joining us. And first, what's the importance of the Red Sea in global trade?
Hi, good to talk to you, Zhao Yang. So the Red Sea, it's a very major sea route to connect Asia and Europe. And globally, about 15% of the international shipment pass the Red Sea. And so the total goods passing it every year is estimated to reach, $1 trillion US dollars. So with now, the Houthis are attacking the ships, and so many of the shipping companies either suspended their route altogether, or they are thinking rerouting, as you mentioned, through South Africa. And so that added tremendously to the delay for those shipments, not to mention the rising shipping cost. So we're looking at the shipping cost between Europe and Asia has surged by 170%. And many of the ships now are rerouting, which means, again, significant delays are down the road. And so those means, the goods, ranging from tankers for oils to furniture to clothing to automobile parts will be significantly delayed, or the cost of shipping will be increasing. So this will have really major impacts on the global supply chain.
And so, no one knows how long will this interruption of services could last, but what are the implications for the trade and global economy if the situation lingers through, going on spring and beyond?
Right. I think that's a great question. So definitely we don't know how long this is going to last. So the Houthis actually started to attack, ships going from Red Sea as early as 2015, but now their attacks simply got really heightened. They also employed now new tactics, for example, landing helicopters on those ships and hijacked the entire ship. As of now, they still have 25 ship crews were detained. So it's just getting worse, and that's going to last longer before things can get better. The United States has trying to provide military protection and escort to some of these ships. But that may not be really the solution, and it's possible to escalate the situation. So even if this started to die down, we're gonna still see major delays because all the supply chain is a very complex web. Once the delay started, then it's going to create a kind of backlog. It's gonna take time to smooth it out. But as of now, I think we're only looking at significant delay in terms of shipment, but also rising shipment cost. But there are also other costs that would add up. For example, with the rising cost of the rising times of transit, you would have to add more crew cost, fuel cost, and also let's not forget the insurance cost. The war risk insurance used to charge 0.02% of the total worth of the shipment. And now the rate has gone up to 0.7%. So that means, this is going to create, millions of dollars of more costs for some of these mega ships. Mm-hmm. So that's definitely going to increase prices of the goods on top of the delay. So we're going to likely to see, now the manufacturers are the first to be hit, by these problems. But then later on, I think consumers will soon, find the prices of products increasing or the shelves, stay empty for a while.
So, Jiahe, we know that the costs of shipping are going up, but not all added expenses have been passed to consumers so far. If you look at the United States, for example, the market hit 2 new records with the S&P 500 and Dow. So when do you think the consumers are going to start feeling the pinch first?
Well, if you talk about the impact of this Red Sea crisis to the United States economy, I think it's probably the economy. If you look at the three major economies in the world, the European economy, the Asian economy, and the U.S. economy. The U.S. economy is perhaps the one that is hit the least because of this Red Sea crisis, because its imports coming from countries like China and Japan goes through the Pacific Ocean, and its imports coming from Europe goes through the Atlantic. And most of the shipping going to the United States can actually bypass the Red Sea. So the Red Sea crisis is mainly affecting the trade between Japan and Europe, South Korea and Europe. This sea line has been strongly affected, and the cost has been rising. Now, on the other hand, this crisis is actually putting a small influence on the trade cost. It's not something really big because ships can still go through, all the way through Africa and just pay more money. If you look at the economy, it's always this. A rising business cost is the least thing that you want to worry about. The most thing that you want to worry about sometimes is things like a hyperinflation, these kind of things. But rising cost can always be compensated by the market. Only the cost will be higher for consumers.
So experts warn that the Red Sea crisis would create a chaotic period for Europe manufacturers and retailers. So how do you see it?
Yeah, so I agree with Jiahe to some degree. I do think that is mostly right now a cost issue. But then I think, Zhao, you're definitely right. With European countries, especially the automobile industries, we're talking about, Tesla, Volvo, and these companies already seeing the delay in some of the important shipments for, the automobile components. So I think that would definitely in some ways affect the manufacturing sector, and that it's not just because of the cost, but really production interruption and delay. And I think also going forward, I think companies would just worry more about the securities of the supply chain, the disruptions, the resilience. And so I think that would prompt them in some ways to rethink about their supply chain. And I think that could be a problem in the sense that as we know, if the companies are not having this kinds of risk factors, they would, arrange their supply chain in a certain manner that would really reflect efficiency and, the cost effectiveness and the timely, turnaround of their products. But now, if they have to factor this kinds of security issues, the disruptions of the shipments and so on and so forth, they may want to localize the supply chain. And so over the long term, I think this is not necessarily good for efficiency. Not to mention, when you really concentrate a lot of your supply chain, so to speak, in one basket, I think that would also subject to, a lot of vulnerabilities. And last but not the least, I also can see this going down to a vicious cycle, because the more you're worried about, supply chain issues, the more you want to bring supply chain home, then the less you are cooperating, in the global economy, and therefore you could, end up, increasing some of the tensions, because again, if you value less of that cooperation, then it becomes harder for countries, to move in the same direction. So I see this as a small event, but it could have long-term impact. Especially, I think if this crisis is not well managed, it's very, possible. It's a possibility that this crisis could spread. We have already seen the United States, of course, have already sending their convoy, and this is very different than what the U.S. did before. So I think there is a real danger in terms of the escalation as well.
So Jiahe, talking about the supply chain issue, we know that the car companies like Volvo and Tesla have found themselves without key components, and as a result, they have suspended some productions in Europe. So what key components are we talking about, and what alternatives do these companies have?
if you look at the global business nowadays, it's a large industrial chain, especially for things as large as things like shipping, aircraft, automobile, these kind of things. No country produce all these things just by itself. They actually import a lot of things from other countries, and we form what we call the global production chain, and the cost of this chain is actually the lowest. And when you look at automobile companies, like you said, Tesla, they import a lot of equipment, parts of their cars, the kind of inner furniture, these kind of things from China. They import the kind of chips used for these cars from China, South Korea, and Japan. And they also import the raw material of their tires, the rubber from countries like Indonesia. So you have all these kind of things, and Tesla got a very large factory in Shanghai as well. So you got all these things coming from different countries and regions. And when you have something that interrupts the global production chain, like the Red Sea crisis is having, it will pose some kind of cost pressure to this kind of global production chain. But the good thing is that, as Yan just said, it's just a cost. So, I mean, cost is actually bearable to many economies, especially for China. If you look at China's CPI right now, it's hanging around the 0% territory. Well, the most healthy CPI, according to the economic theory, would be somewhere around 2 to 3%. So a slight rising of price is actually quite bearable to the Chinese economy. And if you look at the US economy, inflation is actually coming downward in recent months. So people are worrying that the Red Sea crisis might pose some pressure to the US economy.
Right. So I think as Jacko pointed out, cost could be a major impact. In other words, when you're adding all these extra costs of rerouting to elsewhere, so you have, like I mentioned, right, the fuel costs when you have to go through South Africa, the Cape of Good Hope, that added, 2 weeks of sailing time that increased the fuel cost, and then the crew cost, and also insurance premium costs. So all this would add up, and so that would increase the costs. So that would, in some ways, increase the inflationary pressure. But of course, as we just mentioned, this Red Sea, even though it's very important, it does only account for about 15% of the global, international, shipments. So it might not be a tremendous, a huge significant increase in the cost and the prices. That said, I would say though, when you look at the international shipping, there has already been a lot of hiccups, right? So a lot of ships that were already used to sail at the Panama Canal, now they rerouted because the climate change and the lack of water has already reduced the capacity of the Panama Canal to allow these ships to come through. And so now they're rerouting to the Red Sea, but then now they're again, cannot, or they're afraid of the attacks, and now they reroute again. So I think it's just, the supply chain could be very fragile with all these shipment delays and disruptions. And so that could be a bigger impact when you think about, putting all these factors together. So to say the least, it's not conducive to lowering inflation for sure. But how long and how much the impacts, then I think that really remains to be seen. But I am quite concerned about, the possibility of escalation or the long drawn out kind of disruptions.
And yeah, also a lot of geopolitical turbulence is now, affecting the world economy. But the forecasts say that Asia will be the world's growth engine this year, and the region is supposed to grow by an average of 5%. So how do you explain the main factors for this?
Right. So I think the Asian economy has really been the bright spot. For one, it has, achieved a really stable growth. So this is a region now is, void of major conflict, unlike in Europe or, Middle East. So the kinds of stability is really helping to promote economic growth. And second is, I think, the Asian economy has sort of the best of the two worlds in the sense that on the one hand, within the region, within Asia, there's very vibrant trade among the countries. We have the ASEAN countries with trading with China, and they have the agreements of, RCEP, and then Japan, South Korea, and these ASEAN economies, they all traded very actively with each other. But at the same time, unlike the European economies, these countries have their economy autonomy. So they have the autonomy in policy making. So that also allowed them to have the necessary, fiscal support or monetary easing when their economies need. So I think that also helped, to promote growth in this region with the kinds of integration at the regional level, but still maintain their policy autonomy. And last but not the least, I think, the Asian economy also has very effective, regional supply chain, also have very significant, innovations, technological developments among them. So I think that's why the Asian economy will remain the locomotive force for the global economy, not only in the past, but also continue on this year and in the future as well.
And so Jiahe, actually, Yan talked about Asia economy. What about China? China has actually sent a clear signal that it will make more efforts to stabilize the capital market and improve the investor confidence. And so what measures have been taken, can be taken, and what's the outlook of China's capital market and China's economy?
Yeah, we have seen a lot of information around the market nowadays about how China will be saving the market, including setting the fund that buys the large companies, ETFs. And actually, if you look at the Shanghai and Shenzhen 300 ETF, it has got a lot of subscription these days. A lot of money actually flow into these funds. And we have seen that the PBOC has, the China Central Bank has just cut its reserve requirement ratio last year by 50 basic points. It also, the CSRC, the Security Regulatory Committee, has also announced its support to the capital market. So it's actually quite a lot of news coming out regarding the supporting of the Asia market and the Hong Kong market. And we have saw the market has been rebounding pretty well. And if you look at the valuation of China's equity market right now, actually draw a chart of the Shenzhen Composite Index. Look at the PB valuation. It's actually one of the lowest valuations in its own history of over 3 decades. It's been about 5 or 6 times in history that this index reached this valuation as it is right now. And if you look at the performance of the market in the next 3 to 4 years, it's always a bull market. So it's definitely time for you to join in this market, just to pick the right stocks. And time will reward the investors with a lot of money, I would say.
Well, we're speaking with Chen Jiahe, Chief Investment Officer at Novim Archi Technologies, and also Yan Liang, Professor of Economics, Willamette University. And after a short break, we'll take a look at what the UN says about global tourism this year. Stay with us.
Deep Dive, a podcast of CGTN Radio. We go beyond headlines with reporters from around the world. Search for Deep Dive on Apple Podcasts, Spotify, Google Podcasts, or wherever you listen. Take a deep dive into the news every week. Hear our conversations.
You're listening to Biz Today. I'm Zhao Yang in Beijing. The World Tourism Organization says global tourism is set to recover from the pandemic fully this year. A recent projection by the UN says this year's international tourist arrivals will be 2% higher than in the year 2019. Increased global air connectivity and a strong recovery of Asian markets are the driving forces of a complete rebound in tourism activities. However, the organization describes geopolitical instability in the Middle East and elsewhere as a key risk affecting confidence among travelers. So yeah, actually, the World Tourism Organization says the global tourism is set to recover from the pandemic this year fully. What do you think are the main factors contributing to it?
Right. So I think, as you mentioned, they cited factors such as, the pent-up demand. Again, after pandemic, they now are longing for travel abroad. So the kinds of pent-up demand is going to help to, drive up global tourism. They also cited increased air connectivity and also the stronger recovery of the Asian markets as the main reasons. So when you look at Asia and the Pacific, for example, their recovery from the pandemic was still not as high as other regions. So they basically reached 65% of the pre-pandemic global tourism level last year in 2023. Compared to Europe, Middle East, Africa, they all reached over 90%. So Asia is in some ways lagging behind in terms of their recovery in the global tourism. But that's the reason why they think that the global tourism is going to grow a lot. It's because there's still very large room for Asia and the Pacific to increase their recovery in the tourism market. But that said, I think they also caution about several factors that could pull back the global tourism. As you mentioned, geopolitical conflicts, including armed conflicts in both in Europe and also in the Middle East. There's also rising costs and rising interest rates, oil prices. All these would also in some ways pull back on international travel. Not to mention the most recent episodes of this Boeing airplane incidents. So I think that in some ways would also become some kinds of barrier for the kind of recovery.
So Jiahe, what new trends do you find in the global tourism after the COVID pandemic?
Well, when we look at the global tourism industry, it's actually been shrinking slightly after the COVID pandemic. One reason is that the COVID hits the confidence of a lot of travelers. The other thing is that because the COVID has been lasting pretty long, I mean, if you remember, it's about 3 years. So a lot of traveling agencies, especially for the global traveling, people need travel agencies and guides to guide their traveling in a country that they don't even speak the language about. And a lot of travel agencies actually got closed during these 3 years. I mean, not many of them had the money to, last for 3 years. And a lot of, the staff of the traveling agencies actually shifted their jobs. So it takes a while for the whole industry to get recovered. I mean, if you look at the China's tourism industry, for example, the domestic traveling industry has been quickly recovered within, I think, about 6 or 7 months. And we have seen that the domestic traveling market just went back to where it was. But the international traveling is still shrinking compared with what's been going on in 2019. So it takes a long while before this whole industry recovers. But as long as the world remains peace and not another pandemic comes back again, this industry will finally recover. We will see that one day.
So Yan, what are the main reasons for the tourism surge in the Middle East last year? And to what extent could the geopolitical instabilities, affect its tourism this year?
Right. So I think last year there has been increase in tourism in the Middle East, and part of the reason I think also has to do with the way they facilitate the travels to allow more people coming to Middle East. For example, they have done increasing the travel in terms of tourist visa to bring Middle East and Africa with some of the Gulf Cooperation Council countries together, and that really helped to facilitate the kinds of travel visas for tourists. So that helped to facilitate the intra-Africa travel and also allow more tourists from elsewhere. So the kinds of visa and travel facilitation, it's really, I think, one major major helper to bring back tourism to the Middle East and to Africa. And I think, similarly, China now has, provided visa-free for 6 countries, including, France, Germany, Italy, the Netherlands, Spain, and Malaysia. And so I think that kinds of visa facilitation would also, allow China to, improve its international tourism destination as a destination. But that said, I think, because of the armed conflicts and in the Middle East, so it's concerning if that would in some ways deter the international travelers. But again, I think, there are, some very interesting events that are going to happen. For example, people may go to Europe to, watch the Olympic Games. And again, like I said, China is going to welcoming more tourists. So hopefully that would help to, promote global tourism, despite these concerns and uncertainties of geopolitical and armed conflicts.
So Jiahe, so when do you think China's outbound tourism will return to the pre-pandemic level, and how will that contribute to the overall recovery in global tourism?
It's actually one of the largest things the global tourism industry can actually expect. I mean, China's outbound tourism industry, because if you look at China's outbound tourism industry right now, it's actually 30% of what's before the pandemic. I didn't really check the data, but the number is really low. So the whole industry is recovering really slow because of the language. I think the main obstacle over here is the language. But the bright side is that because it is not yet recovered. So its recovery in the future will bring a lot of momentum to the growth of the global tourism industry. Currently, the Chinese government is actually putting a lot of efforts with encouraging both the outbound and the inbound tourism industry. I mean, the global traveling, we have seen a lot of measures has been lifted for foreigners to come into China with their visa application. And some countries has got granted from the Chinese government that they don't even have to apply for a visa at all. Recently, a lot of countries has been added to this list. So you have seen a lot of actions conducted by the Chinese government. So I think in the next 3 to 5 years, we will see this industry gradually recover.
Well, we're speaking with Chen Jiahe, Chief Investment Officer at Novim Archi Technologies, and also Yan Liang, Professor of Economics, Willamette University. And that's all the time we have for this edition of Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.